Welcome to our third lecture covering the Fair Labor Standards Act. In our first lecture, we kind of did an overview of the FLSA, and in our second lecture, we discussed how to figure out what the minimum wage is and how that calculation is made. In this presentation, we're going to cover overtime wages and the exemptions that exist to the FLSA. And in subsequent lecture, we'll cover the child labor provisions of the FLSA, the Equal Pay Act briefly, and we'll discuss the Texas wage statutes, so the statutes that aren't part of the federal law. So let's begin. We're going to talk about overtime pay. So we've discussed how we make the calculation to figure out what somebody's actual effective wage rate is. And that's really important to know if the person is paid on an hourly basis and the person works over 40 hours, because until we know what their effective hourly rate is, we can't figure out what time and a half of that hourly rate is. Let's go back to our example. Let's think about, actually we'll change the facts a little bit. So Bob works $10 an hour on the assembly line, but he also sometimes works $12 an hour job for the same employer in the shipping department. Sometimes he works 30 hours at the $10 an hour job and 10 hours a week at the $12 an hour job. Sometimes maybe it's 20 and 20 or 10 and 30. It may vary, or it may always be the same. That's not relevant. So let's say that no matter how these are broken up, the hours are going to add up to 40 every week. But in a particular week, Bob's manager comes to him and says, "Hey, Bob, we need you to work some overtime." Bob says, "Sounds good to me. I'd like to earn some extra money." And so his manager says, "Well, Bob, you're scheduled to work 30 hours on the assembly line and 10 hours in the shipping department, but we actually need you to work 5 more hours in the assembly line function. So you're going to work a total of 45 hours, but those extra hours are going to be over in the assembly line." Now, what Bob might be thinking is, wow, so I'm going to be doing the $10 an hour job, but I'll be entitled to time and a half. So that must mean I'm going to earn $15 an hour. 1.5 times 10 is 15. But Bob is incorrect. It's actually better than that for him. So let's crunch the numbers and see how that works out. So for Bob's straight pay time, he's going to work 30 hours at $10 an hour. So he's going to earn $300 in straight time. And then he's going to earn 10 times $12 an hour, or $120 on the shipping job. So he earns a total of $420 during those 40 hours of wages. So if we divide that by 40, we can see that he actually earns $10.50. That is his effective hourly rate. So for the extra 10 hours above 40 that he works, we're going to multiply that number, 1050, by 1.5 to get his new hourly rate for his overtime hours. And so this would be 5. So it looks like he is going to earn $15.75 for his overtime rate for those 5 hours. So of course, to figure out how many total dollars he earns, we'd multiply this by the hours that he works over 40. And that would be, check my math, I'm not doing this kind of quickly. And that would be, so he earns $78.75. So he earned $420 in straight time, and he then earned $78.75. So he earns very close, sorry, 75. He earns very close to $500. He's just a shade under 500. We're just going to round it to $500. But let's consider a difference. Actually, let me give you the exact number just so we can keep it nice and straight. So that's going to be 5, 7, 8, 9, and 4. But let's switch up the facts. Let's say this time his manager comes to him and says, you know what, Bob, we need you to work 5 hours of overtime, but not in the assembly line project. We need you to work 5 hours overtime in the shipping department. Well, Bob's thought is, oh, wow, that's even better news, because 1.5 times 12 is going to be $18 an hour. That sounds like a good deal to me. But unfortunately, Bob is incorrect. If we have the same ratio here of 30 hours in the $10 an hour job and 10 hours in the $12 an hour job, Bob will have the same effective rate for overtime purposes. And so either way, he will earn $15.75 an hour. Now, of course, his employer could pay him $18 an hour. There's nothing stopping an employer from paying more than is legally required, but the employer isn't required to multiply the rate by 1.5 times by 12, but to find the effective hourly rate here. So in this case, it doesn't really matter what Bob does for his 10 hours. If he does this $10 an hour job or $12 an hour job, or he could even do a $20 an hour job or a $7.50 an hour job. At the end of the day, it's going to be that same amount of money. He's going to earn $498.75. Again, this is a gross number. There's going to be a lot of withholding from it. So that's why it's so important when you do this calculation to go ahead and figure out the effective rate for Bob during that particular week. And of course, that can vary depending upon the number of hours Bob worked and the particular work assignments that he did. Okay, so let's look at why we have the overtime rules that we do. Obviously, this is a function of the Depression, and there was a concern actually at that time that the desire was to get as many people working as possible. And what some employers were doing at that time is hiring relatively few workers, but working them a lot of hours. And that could be disruptive for people's home lives. It could be disruptive for people's health, given some of the industries that might be involved. But probably even a bigger concern was the fact that there were so many people who didn't have a job at all. And so the idea was, what if we could spread the love a little bit? And instead of having one person work 60 hours a week, maybe we could have 2 people work 30 hours a week. And that would mean that many more families were having their basic needs being met. And so the reason for overtime pay wasn't as much to reward those hardworking individuals, but it was to discourage employers from having their workers work overtime. The idea is the government wanted to incentivize the employers to hire additional people who would take up that additional work. And so the employer would say, I don't want to pay time and a half for labor that I could hire a new worker for and pay him or her straight time. So that's kind of the logic behind the FLSA. That logic isn't as true today. I think nowadays probably the greater logic is, or the greater concern is, oh, well, gosh, is it fair for workers to make them work so many hours? As soon as that comes up, can an employer require a worker to work overtime? And the answer is in Texas, yes, an employer can require that. Now, in some states that can't be done, or it can only be done under certain circumstances, but in Texas it isn't an issue. Interesting point that the FLSA has no maximum number of hours that a person can work as long as that person is at least 16 years of age. So in theory, a person could work 100 hours, but the last 60 of those hours would be a time and a half. And as we talked about, or we haven't really gotten into yet, I guess, is the idea of a non-exempt employee. We're going to talk more about that in a few minutes. So kind of put a little bit of a question mark in your head. This is a category of employee who is not paid on an hourly basis, but who is salaried. And we'll go through what I mean by that in a few minutes. Anyway, if that person, if exempt person, forget what I just said. If an exempt person, a salaried person, works over 40 hours, there's no overtime. But when a non-exempt person, in other words, a person who is not paid on a salary basis, works over 40 hours, that is the point at which that time and a half kicks in. So non-exempt means not salaried. And usually most people think of that as not management. But again, we'll go through in great detail what this term means in just a few minutes. Let's consider a couple of scenarios. So employees of the skunk company work long hours in road construction projects because, there's only, maybe in this part of the state, there's only limited time during the year where the weather's good enough to really do the work. So they really push it hard on the days that aren't too hot and aren't too rainy, for example. Now, during one particular week, some workers work as much as 65 hours each. Under those circumstances, skunk is going to have to pay each one of those workers time and a half for the hours over 40. Skunk can't successfully argue, but next week they're only going to work 20 hours a week. Why can't we average it out? The FLSA does not permit that except for very few niche type jobs. The one that comes immediately to mind are firefighters. There is some ability to average out the hours. This is a controversial limitation of the FLSA. Some people say that the fact that employers aren't able to, say, average 2 weeks together or 4 weeks together or something like that, means that sometimes employers will not authorize extra work hours for some employees, and those employees might need that time, but the employer won't authorize it because that would get the employer into an overtime pay situation. And so while the intent of overtime pay is to benefit the workers, it can actually work in such a way that the employee is at a loss. For example, the employer might say, I'm not going to let anyone work more than 40 hours, but next week, nobody's going to be able to work any more than 20 hours. So the average that that particular employee is going to be able to work is only 30 hours. But if the employer were to say, you know what, we've got enough work for everyone to work 60 hours this week and only 20 hours next week. If I didn't have to pay overtime, then that would be a total of 80 hours over 2 weeks. And so in that scenario, the employee might actually earn more money. So the lack or the requirement that overtime be paid can actually be a disadvantage to employees. Whether that's the case or not is a matter of debate, and reasonable people can differ on that point. But wherever you come down on the issue, it's very clear that the FLSA does not permit that. And so it doesn't matter what we think, it's just what the law requires. Let's go to the next scenario. So Mary is a cashier, and during the holiday season, she regularly works 60 hours a week. That's their peak season going into the Thanksgiving, Christmas, Hanukkah season. The department store satisfies the overtime provisions of the FLSA if it pays Mary overtime for the hours that she works more than 40 hours per week. So that's how that works. So under the FLSA, the work week is a fixed period of and regularly scheduled period of 7 24-hour periods or 169 hours per week. And that's just 7 times 24. Typically, this begins at 12 a.m. Sunday morning. And it goes to 11:59 p.m. Saturday night. It doesn't have to go that way. The employer has some flexibility about when it begins or ends, but it does have to be 7 24-hour periods. But while there is legally some flexibility, it's very rare that an employer takes advantage of it. Almost all employers use this schedule. It's just kind of what people are used to. And so if this is the schedule at my workplace, and I work during this period of time 41 hours, then that 41st hour is the hour that is overtime pay. So here are some things that are excluded from that calculation. Remember, I showed you a few minutes Bob's situation where he earns $10 an hour in one job that he performs at his place of employment, and he earns $12 an hour at another function that he does. Well, there are some other ways that he may be compensated, and so it's useful to think about how those might impact. One is his employer may give him a gift. It's pretty common, for example, for there to be a gift in the December or Thanksgiving time period. Maybe a Thanksgiving turkey or a Christmas ham. Maybe a gift certificate or a cheese basket or something along those lines, some kind of Christmassy or Hanukkah-y present that is given to employees. It's not something that they have merited or worked towards. They're just getting it because they happen to be on the payroll on that particular day. If it's that type of compensation, it isn't included in that weekly calculation. If I happen to have been traveling on business and I submitted some kind of expense report to get reimbursed, and that happens to be awarded to me that week, that's also going to be excluded. Profit sharing. Again, this is something that doesn't reflect any particular thing I contribute to the organization for. Maybe this is a 401k match type situation. And so I'm getting this automatically kind of irrespective of my level of performance. And you can see the other things are also not based upon how good of a job Cynthia Groover performed, but kind of automatic things that this particular employer is doing. The types of compensation that aren't excluded are when there is some type of bonus that I am getting, Cynthia Groover is getting, because of something that I myself did. For example, if I'm getting a bonus because I had perfect attendance, that would not be excluded. Or because I met a certain sales goal, that would not be excluded. So when there's an individual examination of my employment performance, then that is what is going to count. That is going to count towards my weekly overtime. Now you can see how this can become very, very difficult. Let's go back to Bob's situation, but we're going to make Bob's situation a little bit easier. Bob only works at one job where he earns $10 an hour. So in the traditional week, he works 40 hours, and so he earns $400 gross. Bob's a really good worker. He hasn't missed a day of work all year long. Plus, he's had really high accuracy at his job. And so his place of employment awards him some sum of money. We'll say they award him $100 for his perfect attendance, and $100, we'll just say $100, we'll keep it easy, $100 for his award for high accuracy. So he actually earns $200 that week. Now, one analysis could be, well, let's go back and let's reapply this money to each one of the weeks that is covered by that. And let's say that this is an award that covers all 52 weeks. And so we have to divide $200 by 52 weeks. And so we'd see, I'm just going to make the award, just to make the math easier. I'm going to make the award this way. So, all right. Oh, that's right. Okay. I guess it would have to be 16, wouldn't it? So 216. So we'll say this award is 8, and that should be 204. Okay. Here, let me think here. So 52 times 4, is 208. So yeah. So each one of these are 100. Each one of these awards are 104, and so in combination they're 208. So then you would have to go back and add to each one of Bob's previous paychecks for this year $4. And let's say Bob, 1 week he earned an extra hour of overtime, another week he earned 3 hours of overtime. Well, he was in fact undercompensated because in that finding out his effective hourly rate, we should have included this $4. Now, we didn't know we should include it because we didn't know he was going to win these 2 awards, but we have to look back and add those amounts of money. You can see the bookkeeping hassles that is involved in that. So this is one of the areas where the FLSA can create some headaches for managers. And sometimes what managers will instead do is say, well, we're just going to treat this $208 as if Bob earned it completely during this particular week. Of course, the danger there is, what if Bob works overtime during that week? Bob is going to earn a heck of a lot of money. So usually what the manager will do is say, nobody can possibly work any overtime this week. If you work overtime, I'm going to fire you. I'll pay you, but I'm going to fire you if you do this. So don't work any overtime. And then you credit this to this particular week. That's a controversial approach, and I don't think it's probably as compliant as a place wants to be. This would be the better approach. But again, you can see the challenges with just doing all of those adjustments to the pay. And so another problem is that this can sometimes cross over from one calendar year to another. And so let's say that this bonus program wasn't from January 1st to December 31st, but it was, it covered some of one year and some of another year. Well, then you'd have to adjust Bob's pay from the previous year, which would mean you'd have to adjust the withholding that you do, and you'd have to issue another tax form, and then Bob would have to file another income tax return. Oh my gosh, you can see how very, very complicated this could become. Bob would be like, please don't do me any favors again. You paid me $4 extra in overtime, but I had to spend 5 hours to get all the paperwork sorted out. It completely was not worth it. So the bottom line is, before you do bonuses of any type that are specific to the employee, think through how you're going to do it and how you're going to process this and make sure that you're complying with the law. Okay, so here we have an overtime example. In this case, this particular employee works 48 hours, so 8 of those are overtime. His hourly rate is $9, and his bonus is he earns $10. So this is how much he earns in total for that period of time. We're going to divide it by the number of hours that he worked. So this is his effective hourly rate for this time. And we've already paid him his straight time for the 8 hours. So now all we have to do is pay that half. We paid him his time. We haven't paid him his half time. And so we're going to multiply our effective hourly rate by half time, and that gets us $4.61 per hour. And then we have to multiply that by the number of overtime hours he actually worked. And so we get to $36.88. That's the amount of overtime that's due. So we take this number, which is his straight time, and this is his overtime extra payment, and that gets this payment. That is what this particular worker is due. Okay, so now we're done with overtime. Yippee! Now we're going to go on with exemptions. Exemptions are pretty complicated, and these are very fact-intensive analyses. So bear with me when we go through these. These are important things, especially if you're thinking about being an HR professional. As a employment law paralegal, you may not need to get into the weeds that much with this, but if you actually work as an HR professional, most likely you will need to become quite conversant in this. Okay, so under federal law, most employees are what we call non-exempt. This is a double negative. It's not a bad grammar example, but it's a double negative, because what does exempt mean? Exempt means does not apply, right? I'm exempt from that rule. That rule does not apply to me. but we have the word non in front. So that means not, right? So it's not does not apply. In other words, it means it does apply to me. The rule does apply to me. So it's a crazy way of saying it. Why do we say the rule doesn't not apply to me when we could just say the rule applies to me? I don't know. I don't know why we say this. I'm not going to defend it. It's kind of ridiculous. But basically, non-exempt means FLSA overtime rule applies to these workers. Okay? So if you're exempt, if you don't have this not in front, not non in front, then it means that you are salaried and the overtime rules don't apply to you. This is important. It can be a little tricky to get it locked away in your head, but it's important that you go ahead and work with that. Maybe put a Post-it note while you're brushing your teeth so you can kind of get that committed to memory. Okay, there has the Wage and Hour Administration has been for many years attempting to change the rules about who is exempt and who is not exempt from the overtime requirements of the FLSA. There were attempts in previous administrations to make this change, and they were very controversial. This time, for whatever reason, they didn't seem to be as controversial, and so they were able to go into effect in early 2020. The rules prior to 2020 really were extremely dated. They were really reflecting an economy that we had in the United States from the 1930s and 1940s, a very kind of blue collar centric, heavy industry type style of employment. It didn't reflect the information technology, the white collar and pink collar world that a more significant portion of our workforce participate in. The changes to the rules this year or in 2020 have addressed some of those issues, but some of the issues are not solvable until the actual statute is changed, because the statute, again, reflects the era in which it's written. It made a lot of sense back then, but it doesn't necessarily make sense now. So we're going to see as we go through these exemptions that in some senses, you may look at it and go, huh? Really? Does that make sense today? Is that how the working world works? Don't be surprised if you have those moments of disconnect. You're thinking if you do have those moments, because they don't completely make sense. But until the Congress really overhauls the FLSA and brings us into the 21st century, there's only so much that the Wage and Hour Administration can do to fix something that's really not designed for our particular economy. Okay, so let's get started. An important threshold, I don't know why I have $2 here. An important threshold is this amount, $35,568. So the more common way to think about it is in a per week basis. You'll see the FLSA focuses upon the unit of the week, not so much the year or the day. And the reason for that, again, is the 40-hour a week is where we look for an overtime payment. So I'm asking you to remember $684 per week. You don't need to know this number. Of course, you can easily calculate it by just multiplying this by 52. Okay, so this is an important figure because if you don't earn, and this is a gross number before any taxes or anything else are withheld, if you don't earn this much per week, you are going to automatically be eligible for overtime. It doesn't matter what you do in your job. So this is this section. You're definitely hourly paid. You're definitely eligible for overtime if you earn less than this amount per week. And that makes sense. These are people who are not wealthy. They are earning a living wage, but they're not, they could benefit from enjoying some overtime pay. The next group that we're going to talk about is people who earn a significant sum of money. And if you earn $107,432 per year, then you are automatically exempt from overtime provisions. There are a few exceptions to this, but generally you're going to be exempt no matter what you're doing. And again, that makes sense too, because these are people who are highly compensated. They don't really need probably overtime at that point. They may want it, but they don't need it. It's people between 35,000 and 107,000 that we say it depends. Some of these people are going to be exempt and some of these people aren't going to be exempt. And so we're going to be spending a significant amount of time figuring out where they fall in this continuum. Now we're going to talk about these people who might fit into the executive, professional, or the administrative categories for the exemptions. We'll talk about what those mean in just a couple of minutes. So let's consider Mary's situation. She's a cab driver. Apparently Mary works in a city where they don't tip for cab drivers, so there you have it. She earns less than $30,000 a year, and she does periodically work overtime. So going back here, 30,000 is less than 35,000. So we're in this territory for Mary. So it doesn't really matter. We don't have to evaluate whether Mary's position is an executive position or a professional position or administrative position. We don't even need to think about that. We know she earns less than 35,000, so automatically we know that she is eligible for overtime pay. So if she works 5 hours of overtime pay, she's going to earn time and a half what her effective hourly rate is for that week. So it would be lovely for us who are making this analysis if a particular job had only had responsibilities that clearly fit into the executive category, or it only had job responsibilities that clearly fit in the administrative category, or that this position only had job responsibilities that were clearly professional. But that's not the real world. Most people do a variety of tasks in their job, some of which are traditionally exempt-like responsibilities, some of which are usually not exempt. So it's kind of a mixed bag of things. As a result, the evaluation about whether somebody is going to be exempt or not, when they fit into this category, is going to be an incredibly fact-intensive examination. And in fact, what can happen is you may have a person, or you may have two people who have the same job title, who report to the same manager, who have the same number of direct reports, and yet how the job happens to be structured for one of them compared to the other might mean that one is exempt and the other isn't exempt. Or it could be that the way Bob does the job is exempt, the way Sally does the job isn't exempt, and vice versa. So it does require a lot of analysis. So what does the court look at when it tries to sort through these complicated situations? Well, one thing it's going to look at is the exempt duties, and I'll talk about what those duties might be. What proportion of the workday is spent on that? If this is only 5%, but 95% is not exempt, it's seeming like probably this particular worker is going to be considered not exempt. On the other hand, if the exempt duties make up 95% of the work and only 5% is not exempt, then it sounds like this person is probably going to be exempt. Now, of course, I gave you two extreme examples. In the real world, usually things are more in the 60 to 40 range. And of course, that can be difficult even to confirm where you are on that continuum. And so it really does get to be a matter of really looking at the data very, very closely. But it's not just a matter of the percentages. And in fact, when I was with one of my clients, we actually did a time study of people who had a particular job. There were, in this particular state, there were additional regulations under the state equivalent of the FLSA, where we had to do an analysis about how many minutes the person did X type of job versus exempt type job versus another. And so we literally job shadowed a few of these folks to see what the percentages were. So that's one way of approaching it. But it's not just a matter of the percentages. Another important aspect is what is the most important part of the job? The exempt part may be relatively small, but it may be the most important part of the job. And so, again, I'll return to the example. I have a friend who was in the Army. And for the most part, he had a very low stress job. But he had one responsibility that he had to do, and he had to be there to do it. If something bad happened, he needed to throw this switch and to do what was necessary under those circumstances. That was pretty much the sole reason his job existed. He might flip that switch only once or twice a week. It might make up less than 1% of his work time, but that is why he was on that particular base, to do that particular task. And so in that situation, it made up 1% of his work, but its relative importance was huge. And so you have to consider that as well. Another factor is that the more that the employee is free from direct supervision, the more likely it appears that that employee is exempt. Now, everybody other than the CEO of a company has a boss, obviously, and even the boss has the board of directors. The CEO has the board of directors as his or her boss. But still, for example, the manager of a whole facility isn't having his direct or her direct supervisor, breathing down his or her neck. There is some distance and some autonomy with that role. On the other hand, if I work on an assembly line, my supervisor may be pacing up and down the row, monitoring me very closely, me and my colleagues very closely. And so in that situation, I have a lot of supervision. And so that would make it less likely that I am performing exempt work. And then, of course, it's good to see how other employees who are doing that type of work are being treated, both within this particular entity and also with competitors. So there are 5 categories of these exempt status that we're going to talk about. We're going to first of all talk about these, the 3 that are in bold, because these are the ones I've already talked about. The ones that fit into the exempt category, into this it depends category, are going to be the executive exemption, the professional exemption, and the administrative exemption. So we're going to focus. So when a person is between this wage rate and this wage rate, when they're in the world of depends, and they potentially fit into one of these exceptions, this is the category that we're going to focus on right now. Okay, we will also, there are 2 additional categories. As I said, there are a total of 5. So we'll look at these 3 first. Then we're going to look at outside sales, and then we're going to look at computer people. Those are the total 5 categories that the FLSA acknowledges. So when we're looking at these first 3, executive, administrative, and professional, we're going to look at the duties test and we're going to look at the salary basis test. Both of these are important vocabulary terms for you to add to Quizlet. So what is the duties test? It's a test that is used to determine whether the employee's duties are genuinely executive, administrative, or professional. Again, just straight from here, executive, administrative, or professional. So we do the duties challenge for the first 3. We don't do the duties challenge for the last 2. We'll have other tests for those, I promise you. One thing that you may be tempted to think is, well, gosh, why don't I just make the title sound like it's executive? Why don't I say, why don't I call the job accounting executive or accounting administrator or administrative accountant or professional accountant? Will that solve my problem? Nope, it won't. It was just like when we were talking about the Equal Pay Act. The title isn't what determines it. It's what the person actually does. I mean, a smart title can possibly make one outcome be a little bit more likely. So I'm not saying that you shouldn't include those types of words. But at the end of the day, the court is going to be much more interested in hearing what your accounting executive does than what the title is you've given that person. Now, of course, for the duties test, you have to be paid on a salary basis. So if we're talking about somebody who is actually paid on an hourly basis, We don't care about any of these rules. An employer doesn't have to claim any of these exemptions. An employer can say, you know what, Bob, you could be exempt, but we're going to pay you on an hourly basis. We want you to be eligible for overtime. And so it's not that that employer has broken any rules. You're always allowed to categorize people as hourly, assuming you pay them overtime, if you want to. The option of having an employee be declared exempt is just an option. It provides benefits to the employers in that you don't have to worry about calculating overtime. You don't have to worry about tracking those hours. So you're probably saving some money and some administrative headaches. But if the employer doesn't want to do it, it doesn't have to. So we're assuming in all these cases that the employer has chosen to pay these individuals on a salaried basis. So that's what the duties test is. And again, we'll talk about what it means to have duties that are genuinely executive. We'll discuss what it means to have duties that are genuinely administrative, duties that are genuinely professional as we go through each one of these exemptions. Let's go to the salary basis test. So this is where we get that $6.84 an hour. So this is the same standard that we were talking about over here. The $6.84 a week standard, not an hour. I'm sorry, I think I said hour there. And so this is what creates our range. You have to earn at least this, $6.84 a week, before we even care about what the job duties are. Let's talk about the pay docking rule. So if somebody's paid on a salaried basis, sometimes there's a temptation for the employer to kind of want to have his cake and eat it too. And it goes like this. Bob is paid, we'll say, $700 an hour. I mean, $700 a week. And he is salaried. And you know what? He works about 50, 60 hours a week. He's working a lot of time here. So the employer really doesn't want to pay him overtime. But according to the salary basis test, he does earn over $6.84. So certainly him being described as an executive or administrative or professional employee who is exempt is a possibility. And so this is what his salary status is. He's not getting any overtime. But you know what? He takes off a Tuesday afternoon to take care of some personal business. He's a little under the weather on Friday, so he comes in 2 hours late. His employer can't dock his pay, can't say, oh, Bob, you arrived 2 hours late, so we're going to pay you a little bit less this week. If the employer isn't paying overtime, isn't paying more when a person works more time, that employer can't they can't turn around and then take deductions when the employee doesn't work maybe the whole 40 hours. And so that's the pay docking rule. An employer cannot dock the pay of a salaried employee without causing that salaried employee to lose his or her exempt status. So again, under the salary basis test, the employee must regularly receive a predetermined amount of compensation each pay period. And again, this is on a weekly pay basis. Now, it doesn't mean that the employee is required to be paid on a weekly basis. It's pretty common for management individuals to be paid on a twice a month basis or a once a month basis. And again, the compensation can't be reduced because of the quality or quantity of work, except for a few exceptions we'll talk about in a few minutes. And here are the exceptions to the no pay docking rule. I'm not going to go through all these. I don't expect you to commit them to memory, but let me just flag this first one. So if I am salaried and I am absent from work for one or more full days for personal reasons that are not illness related, so it's a complete day, not a partial day, my pay can be docked. That's probably the most important exception. The others I'm not going to ask you to commit to memory, but if I were you, I would look them over, especially if you're planning on becoming an HR manager, because knowing the ins and outs of these rules is directly relevant to how you're going to pay your managers and supervisors. Okay, so now we're ready to get into our 5 categories: executive, administrative, and professional. So we're going to talk about these 3 first, because again, for these 3, we're caring about the duties test and the salary basis test. So let's talk about executive first. And again, you can see it's in red, so this is a word to add to Quizlet. This exemption is not confusing, but it's misleading. When I hear the word executive, I think about, the CEO of Exxon, or, some muckety-muck person who probably earns at least $1 million a year. That is not what the FLSA is saying. The executive here, and if you were seeing my hand, you'd see I'm doing air quotes. The executive here can be not even middle management. This is a frontline supervisory position in many, many cases. So let's see what the definition here is. Well, of course, the first thing is we need to meet the requirements of the salary test. The next thing is that the employee's primary duty has to be management of the enterprise. Now that sounds highfalutin, but it could absolutely be a department supervisor. Let's say that I am a department supervisor and my job is to supervise 25 assembly line workers. That's my job. This organization might have 50 supervisors. I'm no big deal. I may be straight out of college, wet behind the ears. I'm not a mover or shaker. Nobody's noticing me. But still, I am involved in the management of the enterprise. Okay, I have to have 2 or more employees who report to me. Wow, boy, I'm a senior executive, right? The general rule of thumb is 80 hours of supervision. So if they're 2 full-time, if my 2 workers are full-time employees, we'd satisfy the 80 hours. If one of my employees works 20 hours a week, another earns 30, another one earns 25 or works 25 hours a week, you can see I'm not quite to 80. So I need another employee. We'll say that employee works 15 hours a week. I got to 80 hours. So it needs to be at least 2, but in this case, you can see it took me 4 employees to get to 80 hours. So once I am supervising the equivalent of 80 hours of work a week, I'm there. I'm an executive. Isn't that crazy? So what does it mean if I am directing the work of 2 or more employees? Well, I'm probably doing things like hiring them, recommending dismissal, giving them disciplinary comments, recommending them for promotions, writing their appraisals, all the things that you think of a supervisor doing. So the bottom line is, yes, it would include the CEO of Exxon. He would be, or she would be, an executive, but it would also include that person straight out of college who's having a very low-level position in an organization, who may just be earning a few dollars more than $684 per week. One of the ways that this can become problematic in an organization is that oftentimes a company will have fluctuating hours. Again, let me go back to my time at JCPenney. During the holiday season, it was very common for lots of employees to work 40 hours a week. But in, say, October, not so much. And so you can see that there might be times where a particular supervisor is supervising 80 hours a week, say in December, if the peak in that particular industry is in December. But in April, this may be down to 60 hours a week. Well, in that situation, that executive lost his or her executive status, executive exemption for that week. So it's something that the employee is going to have to earn, or the manager is going to have to earn each week. So let's imagine that I'm in this situation, and right here I have, what is this? I guess I have 90 hours here, right? We'll assume it's 90. We'll work under that assumption. Well, let's say that this person calls off sick at the beginning of the week. He's got, the flu. He's just too sick to come to work for sure. And I'm not given any other support. And so I have my 3 workers. Well, now I only have 40, 50, 60 hours of supervision. It wasn't something I planned for. Nobody else is really even thinking about it. But for that particular week, I've lost my executive exemption. So you can see how this really needs to be managed and monitored by HR to make sure that the people that you're using the executive exemption for really are supervising 80 hours a week. Some ways to watch for that would be to make sure that each one of them has significantly more than 80 hours a week. And you may say, well, gosh, wouldn't anybody have more than 80 hours a week? I mean, you wouldn't have a supervisor of only 2 people. Well, that's true if the supervisor's only responsibility is supervising 2 people. But it may be that he's kind of a lead person. And so he's actually doing some work as well as supervising the work of others. And so that isn't as crazy as it sounds by any means. So one way HR can handle that is by making sure that it's more than 80 hours. And then another way is making everyone aware that, hey, if this person falls below 80 hours in his supervision for that week, he or she should not work any overtime. Because if he or she does, then there needs to be the payment of time and a half for that. So the bottom line here is don't get thrown by the term executive exemption. Think about 80 hours and think about the authority to hire and fire as being the path to executive status. And so here are some, again, more examples of what management means under this category, and also under this category here. Things like interviewing, selecting, training employees. Again, all these are things that a supervisor or a manager would routinely do, even at the very lowest levels within our organization. And the supervisor wouldn't have to do all of these things. These are just some examples of things. Okay, so now we finished talking about the executive exemption. The next one we're going to talk about is administrative exemption, and it's also misleading. Again, the confusion about these terms to a large extent stems from the fact that we live in a different economy and somewhat a different era than the people who wrote these statutes, who had somewhat different, use of the English language. So let's look at what the administrative exemption is. This applies when the employee has the primary duty of performing office or non-manual work directly related to the management or general business operations of the employer or its customers. That's our first requirement. So in your definition, be sure to include both parts. But I'm going to encourage you to focus most especially on the second part. And the second part is, in the exercise of the primary duty described up here, this particular employee regularly exercises discretion and independent judgment with respect to matters of significance. Discretion and independent judgment is a term of art here. It means what you think it does, but we'll go through some examples in just a few minutes that will clarify this in a little bit more detail. Please add this to your Quizlet, because this is a term you need to have kind of at the front of your head. Include this term in your definition for the administrative exemption, but also separately define that term. So for the administrative tasks, you're going to want to have over 50% of the time doing this administrative task. Now, we don't have the 50% requirement for the executive duty. We just have it for the administrative duty. Again, that goes back to the example of how you would, follow, job shadow somebody to see exactly what percentage there might be. Now, in everyday office life in America, when people use the term admin or administrative person, they typically mean secretaries, receptionists, file clerks. Those people do not satisfy the administrative exemption at all. They do not exercise discretion, independent judgment. I mean, they have judgment. Again, very important jobs. I'm not in any way trying to diminish or reduce their importance, but they are not performing office or non-manual work directly related to the management of the business by exercising discretion and independent judgment. So by definition, a secretary can't be an administrator. A receptionist can't be an administrator. A file clerk cannot be an administrator. So it gets to be confusing because we're using a term in two ways and it's the same word, almost to mean exactly the opposite. Just as with the executive exemption, we also have the salary test requirement for the administrative exemption. Okay, so here are examples of what does not qualify as discretion and independent judgment. So if you wanted to include this as your definition, it's a negative definition, but this could work. So imagine that my boss has told me, I'm a secretary, and my boss has told me to create files whenever we have a new client come in. And so I do that. He doesn't tell me, oh, Bob Smith's our new client, create a file. He doesn't remind me to do that, but that's part of my job, and I will do that when, it's appropriate. Now, I may not do it, I have some discretion about whether I do it on Monday or Tuesday. Maybe it's not clear whether Bob, the new client, is going to be a client or not. Maybe I will wait until I get the first letter regarding the matter, the first documentation regarding the matter. So I have a bit of discretion, but I'm really just following a well-established procedure. I have a little bit of tweaking that I can do as to exactly how I do it, but the overall scheme of it isn't something I have discretion about. It's secretarial work, important work, valuable work, but not work that involves discretion and independent judgment. Performing repetitive tasks or routine work, again, that would not be independent discretion or discretion. So determining whether somebody is exempt from overtime pay based on administrative duties can be problematic because performing office work isn't sufficient in and of itself. And again, it's going to turn on that discretion, independent judgment. And so there's no smoking gun. There's no, oh, if you've got this fact, you're good to go. If you don't have this fact, you're not good to go. The reality is that people who fit into this exemption probably do a lot of stuff that fit into this category too. But again, they need to not only do stuff that involves independent judgment, but they have to have that their primary duty is over 50% in this category as well. And so they don't have to be exercising independent judgment, 55% of the time or something along those lines. But it can become a very, very fact-intensive evaluation. I'm going to be honest with you. Reasonable minds will differ on this. And I've seen many court decisions that can't be reconciled with each other. One court in one case will find that this person did fit the administrative exemption, almost identical facts. Another judge reaches the opposite result. And again, what an employer is going to do in this area is going to kind of turn on how aggressive the employer wants to be. Many employers want to be cautious in this area because, again, you don't want to be in a situation where you've declared someone as exempt when they in fact aren't exempt, and therefore you potentially owe them lots of overtime pay, possibly liquidated damages, lots of problems that flow from that type of situation, especially when there's multiple people in that position. And so most employers take a more conservative approach, and they're likely to say, you know what, if this is in the gray area, I'm going to keep this person in an hourly position so I can sleep at night, so I don't have to worry about this. Okay, so let's consider in the example of human resources, a position that would be administrative and therefore could be salaried, and one that would be non-exempt, would not fit the administrative exception. So what would be a human resources manager who formulates, interprets, or implements employment policies that would meet the administrative duties requirement? So if I'm the one who comes up with the attendance policies in my unit, then that would make me someone who's using independent judgment. If I'm the person who decides who to hire for a position, not using some formula, but actually interviewing people and reaching an independent judgment without looking at some set in stone criteria, then I'm performing administrative duties. But a personnel clerk who screens applicants simply to get data, for example, let's say to have this job, I am a personnel clerk and I am interviewing people for a secretarial position. And one of the requirements is that secretaries have to type 50 words a minute. So I give these people a typing test and I score it to see if they've scored 50 words a minute. There's no judgment involved in that. Now, the person who set the 50 words a minute standard, he or she was using independent judgment. But the person who applies the standard that someone else created, he or she is not using independent judgment. It's an important task to do. It's valuable and necessary, but it is not exercising independent judgment. So in that situation, the personnel clerk is not an administrative employee, and therefore would not be exempt. I'm not going to spend time on this case. I don't really include many of the facts in this, but I wanted to give you just a hint as to how fact intensive these cases are. I actually, many times in these cases, or in court, when I've taught this course in the past, we've spent some time on this case just so you could kind of dive in and see the way the court analyzes it. If you're interested in that, you're welcome to do so. You can pull up this case either through Google Scholar or through Westlaw and find out the specifics of the case. But the takeaway that I'm going to let you reach without having read the case is that these are incredibly fact intensive, and you really have to almost dissect the job into minute by minute envelopes of time. In this particular case, the court concluded that Cash did have managerial discretion, and that he fit the administrative overtime exemption. And so he was not entitled to overtime pay. You do not need to know the name of this case. You will not be tested on it. But I wanted to kind of introduce the concept to you. So now we've covered the executive exemption and the administrative exemption. Now we're going to discuss the two exemptions that fit under the professional category. Okay, so the first one is the learned professional, and the second is the creative professional. Again, just like with the executive and the administrative, for the professional, we care about the salary basis. So we still have the 684 that we're contending with. Here's another term to add to our Quizlet, which is the learned professional exemption. And this is that the employee's primary duty at the work must be the performance of work requiring advanced knowledge. Usually this is going to be in a field of science or other type of learning, and it's going to require a prolonged course of specialized intellectual instruction, meaning college. And college has to literally be required for this job. It's not just that we mainly hire people with college degrees or we prefer people with college degrees. It has to be, we don't even look at you unless you have a college degree. And the best situation for a learned professional is when there's actually a license that's required in addition to requiring a particular educational credential. So you see people with licenses being the best fits for learned professionals. People like attorneys, doctors, RNs, accountants, engineers, architects, pharmacists, teachers. people who have a license and who have to have a license, have to have that college or something beyond college degree. So let's think for a second about teachers. Now, if I were a public school teacher, say with Plano ISD, I would have to have a teaching license, and I would have to have a 4-year degree, for example. So I would fit into the learned professional category. But let's say I go to work for a private school. We'll say Smith Academy. They don't require a license. They can have whatever requirements they want. They may actually hire teachers who don't have a 4-year degree. Maybe they have some kind of woodworking course or some PE course, and they have elected to hire somebody to perform that class who doesn't have a college degree. They're entitled to do that. But under those circumstances, those teachers, and in fact, perhaps all the teachers at Smith Academy, would not fit the learned professional exemption. So let's talk about paraprofessionals. We haven't thrown around this word in this course yet, so let me introduce it to you. A paraprofessional is somebody who works in an industry that includes professionals, and the paraprofessional assists the professional. So, for example, a paraprofessional in the legal field is a paralegal. That's where we get the term from. A nurse assistant might be a paraprofessional for a registered nurse. A paraprofessional in teaching might be a teacher's aide. These individuals usually don't have licenses, or they have a relatively easy to acquire license, and they are not required to have a college degree, although many times a college degree is highly sought after. Now, in the paralegal area, the path that is going to result in the highest wages, the best career prospects, the most interesting work, those jobs are going to go to paralegals who have a bachelor's degree. But there are probably at least half of all paralegals have only an associate's degree. And some paralegals don't even have that. Again, going back to when I started practicing law in 1990, the paralegals with whom I worked with didn't have a paralegal certificate, and most of them didn't attend a paralegal school. Most of them had a bachelor's degree because of the particular firm I worked at, but that wouldn't have been a requirement for paralegals at that particular time. And so because it's not a requirement that there be a college degree associated with the paraprofessional who's a paralegal, the learned professional exemption is usually held not to apply to those individuals. For paralegals, that is the best fit of all of the exemptions that we're talking about. They don't fit into the executive category because typically they don't have 80 hours reporting them to them each week. They don't fit into the administrative exemption because the nature of their job is not to use independent judgment. That's the role of the attorney. And so the best position for them would have been if they fit into the learned professional category. But the way the Department of Labor has interpreted it so narrowly, they don't fit into that exemption. And that's why the Department of Labor says that all paralegals should be paid on an hourly basis and therefore should be eligible for overtime. I'm going to pause here and talk about a related topic here. This is a little bit off topic. I'm not talking to you as a future employment legal professional, but I'm talking to you right now as a future paralegal, or a current paralegal for that matter. This rule that the Department of Labor has concerns many businesses that employ paralegals. Let me explain what I mean. Let's say that I am a corporation and I have a legal department. Maybe I employ 15 attorneys, and I'd like to employ about 6-7 paralegals. My corporation is not in the business of providing legal services. That isn't our product. Maybe we make widgets, or maybe we clean windows, or we do something else. We don't provide legal services. We have a legal department within our organization to provide legal services directly to our company, but that's not our final product. So we don't structure our pay system and our benefit system to be especially focused on the legal department. So we want to attract highly skilled, smart, highly capable paralegals. We want to compensate them well. We want to give them high status so that we can attract those individuals, so that we can persuade those individuals once they come to work for us that they want to stay working for us. And also so that people within the larger organization, when they interact with the paralegals, which they will do, approach working with those paralegals with the understanding that these are highly respected professionals who deserve courtesy, who deserve deference, who have important information to convey, and who should be treated as the professionals they are. All of those things are what a smart corporation would want for its paralegals. One thing, though, in corporate America, this isn't true for every single corporation, but it's true for most, and that is people who are paid on an hourly basis are perceived of as people who aren't going to be earning as much money, who don't have as high a status, who oftentimes are not awarded things like business cards, or who are given a much smaller office, for example. They aren't given the accoutrements of somebody who is perceived of as an important part of the team who's actively involved in making important decisions for the company. And so if a corporation were to pay its paralegals on an hourly basis, its whole pay structure probably wouldn't support paying a paralegal $60,000 or $70,000, which would be pretty typical pay rates for paralegals. And so it would be difficult to figure out how to justify that pay within their hourly pay structure. It would be easy to justify that pay when the person is paid on a salary basis. Similarly, again, that corporation may have a certain style of office or a certain set of benefits that its hourly employees receive. But those may not make that particular company competitive for attracting the most desirable paralegals. So for all of those reasons, many corporations and some law firms want to pay their paralegals on a salary basis. Well, you see the problem here. The Department of Labor is saying that the paralegals are eligible for overtime. But if you pay someone on a salary basis, you're saying you're not going to pay them overtime. So how do you work that out? Well, one solution that some corporations adopt is they say to their paralegals, we're going to pay you on a salary basis, but we don't want you to work overtime. At 40 hours, we want you to go home, and we need you to do that. We need you to not work beyond 40 hours. And that's an important idea, because if these paralegals start working more than 40 hours and yet their compensation is not being affected, at some point the Department of Labor becomes aware of it. That corporation could be in significant financial distress because they're going to have to pay all of those workers the overtime that those workers have worked. So for that reason, it's not unusual in a corporation for paralegals to be told not to ever work any overtime. Now that's the rule, but as we talked about with the 80 hours a week situation, people know the rule at the beginning, but in the trenches, when people are actually, 80 hours rules over here, people are actually working and you've got a lot of work to be done and the paralegal's the logical person to do it, people start forgetting, I'm putting it in air quotes again, that paralegal isn't supposed to work over 40 hours. And so sometimes you do find that paralegals, even in organizations that have been told, don't let the paralegals work more than 40 hours, end up working more than 40 hours. So that's one of the reasons why paralegals are sometimes paid on a salary basis. But there are less lovely reasons why paralegals are paid on a salary basis. And that sometimes can be because the company wants to not pay overtime, wants to pay the paralegals less than probably what they are worth. You see this most commonly in small law firms where there may be some difficulties with managing salary costs. They're highly variable. A paralegal may not work more than 40 hours until the law firm is in trial. And when the law firm is in trial, that paralegal may be working 80 hours a week. So there would be a huge jump in salary costs. And as a result, the law firm may say those kinds of wild swings in salary costs are difficult from a liquidity standpoint for us to manage. The Department of Labor doesn't care about the liquidity of the law firm. So that is a challenge for the law firm if it's going to make its paralegals be paid on a salary basis. Now, larger law firms are going to pay their paralegals on an hourly basis. And this is really how the most highly compensated paralegals earn the big dollars. I know lots of paralegals who've earned six figures, but they've only earned six figures because they happen to be working a significant amount of overtime. When I worked for large law firms, paralegals oftentimes could work pretty much as much overtime as they wanted. There was always extra work to be done. And so some paralegals would say, no, I'm just a 40-hour-a-week person. And oftentimes the law firm would accommodate that. Again, the law doesn't preclude an employer from requiring overtime, but in most law firms I've worked, there were plenty of paralegals who wanted to work overtime that there was the ability to kind of figure out which paralegals wanted which type of deal and sort them accordingly. So this is kind of a touchy issue in the area of paralegal pay. It's an important thing to think about as you go to job interviews in this area. So if you go to a job interview and the place where you're applying place paralegals on a salaried basis, it's very likely that the attorneys, I'd say it's reasonably likely that the attorneys in that department are aware that there is a question mark about the propriety of this under the DOL rules. And so I recommend that when you go to those interviews that you don't talk about this issue. It's certainly appropriate to ask questions about, well, what would my pay be like? But my suggestion would be not to ask questions about, would it be paid on an hourly basis or would it be paid on a salaried basis? At least not until you've actually been extended the offer. After all, at the end of the day, what do you care whether it's hourly or salaried? What you care about is how much you're actually getting at the end of the day. And when you actually are given your offer, it should be presented in a way that you can tell whether it's salaried or hourly. At that moment, if it isn't clear, it would be reasonable to say, now, just for clarity's sake, how is this number calculated? And so get a little bit of clarity at that time. I wanted to flag that for you because if you go into an interview and start insisting upon being paid on an hourly basis, the law firm or the corporation may think that you are not going to be amenable to a salaried position, perhaps because you're aware of the DOL rules. And that can create concerns in that organization. So I wanted to flag that for you. Let's consider this scenario. So Mary's recently graduated from law school. She's an associate attorney. She earns really nice salary, $98,000. She works a lot of hours. So she's interested to know, am I eligible for overtime pay? Well, since she's an attorney, she has to be licensed, and obviously she needs a law degree. So she qualifies for the learned professional exemption. Now, we can see here that she is in the it depends category in terms of pay. If she had earned $97,500, we wouldn't even care whether she was a learned professional or not. And of course, similarly, if it were a paralegal who earned, $108,000 in salary, we wouldn't care. It's only in the it depends category that we care. But since Mary earns $98,000, that's obviously in the it depends category. But because she qualifies as a learned professional, we do not need to make any further inquiries. Mary is not eligible for overtime pay. So we've considered the learned professional exemption. Let's consider the creative exemption. Again, another term for Quizlet. The creative professional exemption employee's primary duty must be the performance of work requiring invention, imagination, originality, talent in a recognized field of artistic or creative endeavor. So examples would be musicians, creative writers, actors, painters, photographers, singers, anyone that fits into those types of areas. And the logic behind this exemption is that many times these individuals work on their craft independently. The actor may be learning his or her lines at home at night. The painter may be, or musician may be working on technique at home, working on fingerings and things like that. And so it would be difficult to know exactly what hours were compensable or not if you were paying these individuals on an hourly basis. Here's just kind of a nice summary of the various categories. So if you have questions, you might find this of value. At this point, we've covered the first three of our categories. And of course, these all have both the duties test aspect and the salary basis test. But now we're going to move on to the outside sales capacity, and then eventually we'll talk about the computer exemption. So let's talk about outside sales. So this is our definition. Again, think about adding it to Quizlet. So an outside sales employee's primary duty must be making sales or obtaining orders. And then add this one too. You need to have this whole section for your definition, because this is about the sales part. So this explains the sales part right here, this section, but the outside part is down here. So when we say outside sales, what we mean is the employee is outside the office. He or she is not located in the physical facility of his or her manager. So for example, let's say that I sell bakery. Let's say I'm Mrs. Baird's Bread Company, and I go out and try to persuade independent grocery stores to carry Mrs. Baird's bread. So I go from Bob's grocery store, making my pitch to the store manager, and then I go down the street to Larry's grocery store and make my pitch to that store manager, and then I go to Teresa's grocery store and make that pitch. Now you can see how it would be almost impossible for my manager at Mrs. Baird's to know how many hours I actually worked. And this, of course, is especially true before people had cell phones or there were other tools to monitor. My boss really wouldn't have known what I was up to in the days before cell phones and pagers. So we made this position exempt simply because otherwise we wouldn't be able to figure out how much to pay this person. You can see that there is no salary test for this particular job. The salary test portion ended right here. These are the only ones that have the salary test portion. We do have a duties test, but it's a little bit different duties test than we had with our first three. So again, this is just really focusing upon the realities of this particular job. There is no need that there be a license required for an outside salesperson. There's no need that there be a particular educational requirement for the outside salesperson. The outside salesperson doesn't need any direct reports, doesn't need to have any independent judgment. So the qualifications that we saw with these don't have to be in place with the outside salesperson at all. So now let's consider our last exemption, the computer exemption. Now this one, naturally, you probably figured this one out. This one actually was not in effect at the time of the Great Depression. There weren't any computers, right? And so here is the definition. There's actually two parts to the definition. We have one or more of these components. And again, these are fairly technical components relating to computer analysis and design. And then we have an and here. Let's go to the next one. This is kind of our secondary salary basis. So we do have a salary basis here, but you can see it used to be different than this because the guaranteed salary or the salary basis test did not used to be 684. It used to be lower than this, and the computer exemption had a level higher than the old standard, but lower than 684. So when the standard went up to 684, the separate computer exemption standard went poof. Now it has been retained for the hourly rate. You may say, hourly rate? At least all these folks were salaried. Well, many computer exemption employees who fit in the computer exemption category are paid on a salary basis, but they can also be paid on an hourly basis. They just aren't eligible for overtime pay, so they would continue to get their straight time pay for hours over 40. Now, this hourly rate is higher. You can see if we were to do the math, 2763, kind of a specific number, isn't it? We multiply it by 40 hours, and we can see that we would have the person would earn about $1,100, a little over $1,100 a week. So we do have that hourly rate that is higher than this. So it's one or the other. In other words, a guaranteed salary of this amount or an hourly rate. Now, a couple things to keep in mind with this. The exemption here does not apply to people who repair equipment or troubleshoot, how a computer works. That is not the function. This is more about the design and the programming side of things. So at this time, we've gone through all 5 exemptions. Just a reminder, an employee may well fit into more than one of these categories. It's only necessary that a salaried or exempt employee fit into one of these categories. They can, but sometimes they do fit into more than one. But if I don't fit into executive, that's okay. As long as I fit into one of these. So hopefully that clarifies that point. So at this time, during this lecture, we've covered overtime wages and the various exemptions to the Fair Labor Standards Act. In our previous lecture, we discussed how to calculate minimum wage and what the rule is there, and an overview of the FLSA. In our next lecture, we'll discuss child labor laws under the FLSA, and the Equal Pay Act, which is a part of the FLSA, and specifically Texas wage statutes. I thank you for your attention. I hope this information has been helpful. As always, if you have questions about the content, please don't hesitate to pop into my office hours. I hope you have a wonderful day. Take care.